I want to start today by talking about a number.
Okay.
925 million.
Hmm.
Specifically, 925 million Hong Kong dollars.
Mm.
So that's roughly 120 million US dollars.
I mean, that's a staggering figure.
It is. And it's the amount of money that a global real estate giant dropped on a single building in Hong Kong.
Okay.
But here's the thing that really, caught my attention.
Yeah.
They did this in late 2021.
Right in the thick of it.
Exactly. The borders were basically shut.
Hmm.
Tourism was at zero. The rental market was, to put it politely, muted.
Muted is a good word for it. Yeah.
And yet this company, Hines, looked at a hotel in Tsim Sha and said, we'll take it.
It's the classic contrarian bet, isn't it? But when you peel back the layers, it's not just a bet on Hong Kong recovering.
Well,
it's a bet on a completely new way of living in cities.
that is what we are unpacking today on the deep dive. We are looking at Dash on Pratt. It sounds a bit like a hip new nightclub, but it's actually an 18-story co-living facility that just launched in Tsim Sha Tsui.
Mm-hmm.
And the reason we're talking about it isn't just because it's a new building. It's because of who is behind it and what it all says about the future of housing.
The who is critical here. You mentioned Hines. For those who don't, track global real estate portfolios, Hines is massive. They have assets all over the world.
All over.
But, and this is the key, this project is their very first rental apartment investment in Hong Kong.
Wait, really? They're first? They've been in the region for years, haven't they?
They have a huge presence in Asia, Pacific Japan, Australia, China, but in Hong Kong, they've stayed out of the rental residential market.
Until now.
Until now. So for them to make their debut with this specific project at that specific time, it signals a major shift in their strategy.
So they aren't just buying a building. They're buying into
Yeah.
a thesis.
Precisely. They are pivoting hard into what the industry calls the living sector.
Okay, living sector. That feels like one of those, industry buzzwords. Isn't all housing the living sector? What does that actually mean here?
Well, it distinguishes itself from the traditional buy-to-let model or home ownership.
Mm-hmm.
The living sector usually refers to professionally managed rental-focused residential properties.
Ah, okay.
So think multifamily units, student housing, and yes, co-living. It's about viewing housing as a service, not just a physical asset you own.
So it's less like I'm renting a flat from a landlord who might fix the AC eventually,
Yeah, exactly.
and more like I'm subscribing to a living experience.
That's a great way to put it. And Hines is betting big on this across the entire Asia-Pacific region. They are expanding their multifamily portfolio in Japan.
Right.
They're looking at build-to-rent in Australia. And now they are planting a flag in Hong Kong with Dash on Pratt.
Let's talk about the building itself then, because this is where the adaptation part comes in. This wasn't built from the ground up as an apartment complex.
No, and that's one of the most interesting aspects of this whole deal. This used to be the Butterfly on Pratt.
A hotel.
It was a hotel.
So they took a hotel and turned it into apartments. I feel like we're seeing this headline a lot lately. Office to residential, hotel to residential.
Mm-hmm.
Is it as easy as just swapping out the furniture?
Not even close. It's actually a massive engineering and regulatory headache.
I can imagine.
I mean, think about it. A hotel is designed for transients. You stay for 3 days. You don't need a lot of storage. You probably don't need a kitchenette. The fire codes are different. The plumbing loads are different.
Right. In a hotel, everyone showers at 8 a.m. In an apartment building, it's more spread out, but you have washing machines running constantly.
Spot on. So when Hines and their investment partner, Mindworks Ventures, bought this for nearly $1 billion, they weren't just buying the shell.
Well,
They were signing up for a very complex renovation to repurpose the asset. They had to transform 18 stories of hotel rooms into 158 livable units.
and the location adds another layer of complexity. We're talking Tsim Sha Tsui. For anyone who hasn't been to Hong Kong, painting a picture of TST is challenging. It's intense.
Intense is the word. It's the beating heart of Kowloon. You've got
Yeah.
neon signs, luxury malls, tailor shops, tourists, locals, all packed into a very, very dense grid.
The source material mentions it's near the East Tsim Sha Tsui, MTR, and major shopping complexes. It is undeniably convenient.
It is, and for the demographic they are targeting young professionals, that location is the primary amenity.
True.
You step out the door at 21 Pratt Avenue and you are right in the mix. You don't need a car, you barely even need a taxi.
Yep.
Everything is walkable.
But let's talk about what happens when you step inside the door, because we need to address the elephant in the room, or maybe the size of the room.
Mm-hmm.
The units at Dash on Pratt range from 210 to 395 square feet.
It is tight.
210 square feet. I'm trying to visualize that. That is roughly the size of a standard parking space. Maybe a little bigger.
It's a micro unit. There is no other way to spin it.
So help me understand the value proposition here. Why would a young professional with a good job, because these aren't going to be cheap, choose to live in a parking space-sized room?
This is where the whole philosophy of co-living really gets tested. The argument is that you're trading private space for shared luxury.
Okay.
It's the concept of the bedroom is for sleeping, the building is for living.
Is that just marketing spin for we chop the building up into tiny boxes to maximize rent?
Well, there is certainly an economic incentive for the developer, absolutely. More units equals more rent roll. But there is also a genuine lifestyle shift happening with younger generations,
You think so?
especially in dense Asian cities. They prioritize experience and location over sheer square footage.
So I give up my living room, but what do I get in return?
You get the amenities that you would never be able to afford in a private apartment in TST. Dash on Pratt has a communal kitchen, a laundry area, a dedicated workspace, a lounge,
And a yoga room I saw.
and a yoga room.
The workspace stands out to me. In a post-pandemic world, if you're working from home in a 210 square foot room, you are going to go crazy.
You would. It would be completely claustrophobic. That's why the workspace isn't just a nice to have, it's essential infrastructure for this model to work.
Right.
It allows you to separate work from rest without ever leaving the building. You wake up in your unit, grab a coffee in the communal kitchen, and then go to work in the lounge.
It effectively makes the whole building your apartment. Your actual unit is just your private bedroom.
Correct. And then there's the community aspect. The source talks about creating ready-made communities.
I always get a little skeptical when I hear landlords talk about community. It sometimes feels like they're trying to monetize friendship.
And that's a fair skepticism. But think about the target audience here. Expats, digital nomads, people moving to Hong Kong for maybe a 6-month contract. Loneliness is a real issue in big cities.
That's true. Moving to a new city where you don't know anyone can be brutal.
Exactly. So moving into a building where you know there's a mixer on Friday night, or where you'll bump into people in the communal kitchen who are in the same boat, that has tangible value. It's a kind of soft landing into the city.
It's almost like a dormitory for adults, but with, better furniture and no RA checking your room.
Critics do call it adult dorms, and they aren't entirely wrong, but for a certain phase of life, having that built-in social network is worth sacrificing a dining room table.
Let's get back to the business side. We have Hines, the money, and the building owner. But they aren't the ones changing the light bulbs or organizing those Friday mixers.
No, that's where the partnership comes in. They've brought in Dash Living to operate the property.
The Dash is the local expert here.
They are a major player in this flex living space. They manage over 2,000 rooms across Hong Kong, Singapore, Tokyo, and Sydney.
That is a pretty serious footprint.
It is. And this partnership structure is really important to understand. It's a classic PropCo-OpCo split. Hines is the property company. They own the asset. Dash is the operating company. They run the business inside it.
Why doesn't Hines just hire a regular property manager? Why partner with a brand like Dash?
Because Dash brings the technology and the network. Aaron Lee, who's the founder of Dash, talks about leveraging their global sharing economy, community, and technology.
Okay, again, lots of buzzwords there. Global sharing economy. What does that actually mean for the guy renting the room?
It means the software of the building.
Yep.
It's likely an app-based experience. You pay your rent, you book the yoga room, report a leaky faucet, maybe even chat with neighbors all on your phone.
So it's frictionless.
That's the goal. And for Hines, it's about efficiency. Dash has the systems in place to manage high turnover tenants. If you tried to run a building like this with traditional paper leases and a guy at a front desk, the overhead would just kill your margins.
And I assume being part of the Dash network means something too. Like, if I move to Singapore, can I stay in a Dash building there?
That's the nomadic vision. If you're a member of the Dash ecosystem, you have a familiar landing pad in multiple cities. It builds brand loyalty in a sector that, usually has none.
This is the hotelification of apartments. You trust the brand, so you book with them regardless of the city.
Exactly. And that brings us right back to the timing of this whole deal. We touched on it at the start. Hines bought this in late 2021. The renovation took time and they launched recently. But when they bought it, the Hong Kong market was rough.
Muted recovery is the phrase the analysts used, right? Rents for serviced apartments had actually dipped in 2022.
They had. So why buy then? Why pour nearly $1 billion into a market that is sliding?
Well, because you buy low and sell high.
Well, yes, basic economics, but also they were looking at the macro trends. They saw the signals that Hong Kong was going to reopen.
Okay.
The lifting of quarantine rules, the removal of mask mandates. They were betting that once the friction of entering Hong Kong was removed, the professionals would return.
And specifically, the type of professional who wants this exact product.
Correct. They aren't betting on families returning to rent three-bedroom luxury condos on the peak. They are betting on the mobile workforce, the consultants, the fintech workers, the people who need flexibility.
It's a very optimistic bet on the city's resilience.
It is. And Xiangling Eng, who is the CIO for Asia at Hines, also framed it around housing affordability.
That's an interesting angle.
Hmm.
Hong Kong is notoriously expensive. Are they saying these micro units are the affordable solution?
Affordable is always a relative term in Hong Kong. But yes, by shrinking the unit size, they can keep the lump sum rent lower than a traditional apartment in the same district. It opens up simshatsui living to a demographic that might otherwise be pushed out to the new territories.
So you pay less rent in total, but your cost per square foot is probably astronomical.
Usually, yes, that is the trade-off. You're paying for the location and the amenities, not the floor space.
I want to zoom out a bit and look at what this means for the industry as a whole. We have a hotel turning into co-living. We have a global investor backing a local tech operator. Is this the future?
I'd say it's certainly a growing wedge of the market. I don't think everyone is going to start living in 200 square foot rooms. But for the transitional phases of life, this model makes a lot of sense.
It also seems like a sustainability play, in a way. This whole idea of adaptive reuse.
It's huge. We talk a lot about green buildings, but the greenest building is the one that is already built. Repurposing a concrete structure like the Butterfly Hotel is far less carbon intensive than demolishing it and building a brand new tower.
So Hines gets to tick the ESG box as well.
Definitely. And from an investment perspective, it diversifies their risk. Hotels are volatile. If tourism drops, your revenue goes to zero overnight. Apartments are sticky. Even in a downturn, people need a place to sleep.
So they've taken a volatile asset, a hotel, and tried to turn it into a stable, yield-generating asset housing.
That's the financial engineering behind the physical engineering.
But there is a risk, right? What if the young professionals don't come back? Or what if they decide they actually do want a kitchen table after all?
That is the risk. If the concept of co-living turns out to be a fad, or if tenants burn out on the micro-living lifestyle after 6 months, you have high churn. And high churn is expensive.
You constantly have to market the units, clean them, process new tenants.
Which is why the operator dash is so crucial. Their job is retention. Their job is to make the community sticky so that people stay longer than they originally intended.
So if we look at Dash on Pratt as a case study, it's really a test lab for the post-pandemic city.
I think that is a fair assessment. It's testing a few big things. Can you repurpose old hotels effectively? Will global capital continue to flow into Asian rental markets? And are people willing to live smaller, to live better, or at least better located?
It really challenges the traditional Hong Kong dream, which was always about owning a flat. This is suggesting a future where you might never own, but you have access to everything.
Access over ownership, that is the defining trend of the subscription economy, and it's finally hitting real estate in a really tangible way.
It's fascinating to watch. And honestly, walking past that building in TST, you might not notice anything different. It's just another high-rise. But inside, the logic of how the city works is being rewritten.
The hardware is the same, the software is brand new.
I love that analogy. It's a software update for a concrete building.
Spot on.
Well, we have covered the money, the strategy, the tiny rooms, and the big bet on Hong Kong's future. A lot to digest.
It is, but it's a space worth watching. Because if Hines is right, we're going to see a lot more Dash-on Pratts popping up across the region.
Which brings me to the thought I want to leave everyone with today. We spent this time talking about a hotel that became a home. As we see more of these global firms, the Hines of the world, buying up hospitality assets to convert them, are we witnessing the slow death of the traditional business hotel?
That is the billion-dollar question.
If I'm a business traveler staying for 2 weeks, and I can stay in a place with a community, a kitchen, and a workspace for the same price as a generic hotel room, why would I ever choose the hotel?
The lines are blurring. The hotel of the future might just look a lot like an apartment.
And the apartment of the future might look a lot like a hotel.
Exactly.
Something for you to think about next time you're booking a trip or signing a lease. Thanks for joining us on The Deep Dive. We'll catch you next time.